Let's talk about Marathon and HUD-8, just two miners that, is equity that you own, correct?
Yes,
Mike?
Those are my two top picks for publicly traded miners today, just because I've spent more time with those management teams. I'm more familiar with their operations. I could tell you more about them and why I think they're going to win. But
talk to us about the valuation. So how are you thinking about this? Because there's people ask me all the time, Preston, I want to own equity in addition to owning Bitcoin in this space. I'm having a hard time figuring out how to value it.
So maybe start at the highest level, which is, in my view, there's kind of four legs to the Bitcoin ecosystem stool, right? So there's users, right, which includes people just buy and hold Bitcoin, people who use it in Nigeria to transact with each other, people who run nodes to confirm their own transactions. So they're important. Obviously, without users, there's no Bitcoin. There's no need to have it. They're also investors, right, who are attracted by all the user activity, who want to invest in the ecosystem, right? They're also software and infrastructure providers. So I'm thinking of companies like Coinbase and BitGo and Lightning and Strike and Lightning Labs and Strike and other folks that are building, really interesting components. But maybe one of the most important but most misunderstood components of the stool in Bitcoin for me is the Bitcoin mining part of the stack. And so Bitcoin miners serve so many different roles, but obviously at the very front end there, they're providing the hash rate that keeps the network secure, right? So without Bitcoin miners, right, proof of work just doesn't actually work. And so you need them to be there. But they're also, when you think about it, they're the only people in the ecosystem who can create new Bitcoin. Everybody else is interacting with Bitcoin that they already owned or that already existed. Bitcoin miners are creating new Bitcoin every day. And so they're like central bankers in a sense. I hate to use that nomenclature just because it's not going to go over well with this community, but in a sense, they're like bankers. And so when you're thinking about a Bitcoin miner, I like to start with the balance sheet. I think it's a good way as a value investor to make sure you don't lose money. And so let's just start with the high level. So HUD-8 and Marathon are my two favorites, right? But HUD-8 and Marathon are slightly different companies. HUD-8 is Canadian, Marathon's based primarily in the US. HUD-8's about a $1.5 billion company. Marathon's about 3.7, let's call it 3.5. So together they're about $5 billion companies. So when you look at their most recent production reports, you see some really interesting things though, right? So HUD-8 actually mined 362 Bitcoin in the month of August, right? Marathon mined 460 for the month of August, right? So you can build that up to kind of like an annual run rate. So the way I think about it right now is approximately that HUD-8 and Marathon should be able to mine about 10,000 Bitcoin over the next 12 months. Think about that, 10,000 Bitcoin. That's incredible. What do you think about it? And their current Bitcoin in their balance sheet right now for HUD-8, it's about 205 million, right? So it's 4450 BC. For Marathon, it's 6695, so about 6700. So they have about a little over 11,000 collectively. It's a sum total of about $500 million of Bitcoin. But they're actually, over the next 12 months, just given the current assumptions we have about hash rate and the price and whatever, they're probably going to be able to mine 10,000 Bitcoin. And remember, that should continue for the next about 2 years and 8 months until the next halving. 2 years, 7 months, 2 years, 8 months, something like that, right? And so I think they should be able to mine collectively about 28,000 Bitcoin to add to the 11,000 they already have in balance sheet. Remember, both Marathon and HUD-8 have come out publicly and said our strategy is to hodl Bitcoin, right? We do not sell Bitcoin. And this is a new thing, by the way. This is part of the falling cost of capital we're seeing across the mining space. 4 or 5 years ago, it was so hard to raise equity or debt for a miner. Now, all of a sudden, there are a lot of people active. And some of the biggest mining deals that happened, by the way, this spring were never even announced, right? $100 million plus equity and debt deals that were never really even talked about. And so because of that, the cost of capital is falling. And so now Marathon and HUD-8 are able to just stack Bitcoin. So they're effectively industrial scale hodlers. In my current forecast, over the next decade, they should be able to add about 60. So they'll have about 60,000 Bitcoin collectively, just these two miners, right? Which today have a sum total of a $5 billion market cap, right? So remember those numbers, 5 billion market cap, about 11,000 BTC on the balance sheet today, probably something like 60,000 BTC within, say, 6 years between the end of this halving cycle and the end of the next halving cycle. So 2026, 2027, 6 years approximately. Let's say we get to 60,000. Now humor me for a second and assume that we see $1 million Bitcoin price, right? Now you're talking about $60 billion of balance sheet Bitcoin in 6 years collectively on two companies that today are worth $5 billion. So you've got something like a 12x just on the balance sheet. Now, remember today that these companies are trading at collectively a $5 billion market cap, but they only have 500 million of BTC. So they're effectively trading at 10x their balance sheet BTC. But I'm talking about their balance sheets growing 12x over the next 6 years, right? Now, that's just the balance sheet side. Now think about all the business lines that you can build on top of Bitcoin mining. So hint, the big secret for Bitcoin mining is that Bitcoin base layer Bitcoin mining is just like step one of building a platform play in this space. You're going to obviously run your miners. You're going to run them cheap. You're going to keep your cost of power low. You're going to acquire miners when they're cheaper. You're going to plug them in. You're going to be smart about keeping them cool, keeping them clean, not overclocking them, but overclocking them maybe just a little bit to maximize your yield. But at the end of the day, some of this business gets commoditized over years. But I do think the best operators will continue to be able to maintain market share. Right now, Hut 8's about 1% of network hash rate, maybe a little more. Marathon's closer to 2%, but they're forecasting, Marathon is forecasting explosive growth. They're forecasting 133,000 Ant miners, S19s plugged in July of next year with something like 13 exahash, right? Something crazy like that. And assuming the network hash rate goes back up to kind of over 150 towards 200, I think Marathon's headed to sort of like 5 to 8% market share, and Hut's going to probably be able to maintain 1%. So the numbers I just gave you, 60,000 BTC in 6 years at $1 million price, which would be $60 billion of balance sheet. That's assuming that they just maintain their current kind of 1 and 2% shares. I actually think the best companies will actually increase their market share over the next 5 years, because what's happening is as the business gets bigger, it's harder and harder for people that don't have scale to negotiate for the lowest power cost, to negotiate with Canaan and MicroBT and Bitmain and Bitfury, right? And all of these companies that make the chips. If you don't have leverage, you don't have scale, you're probably going to pay more. And so you're not going to be competitive relative to a Marathon or a Hut. And so that 60,000 could be 80,000, could be 70. I have no idea, but I think 60,000 is a reasonable assumption for the next 5 years. So when you look at it just from that perspective alone, Preston, I think what you see is that like Bitcoin miners are probably a pretty good way to make 20 or 60x your money over the next decade, conservatively. And Bitcoin may do better, may do worse, but assuming Bitcoin does go to $1 million Bitcoin price, you're talking about a kind of a 20x return in Bitcoin, and probably at least double that in the best performing Bitcoin miners. And for that reason, I tend to think the best idea is to own both.